Welcome back to Small Cap Big Ideas. It's fantastic to have you with us for the live event. Don't forget you can ask live questions, and that's the real benefit of being along for the live program. However, don't forget we will have these on offering as on demand when the event wraps up today. So let's get straight to it, shall we? It's what you're here for, some ideas in the small cap space, and really pleased to welcome to studio Dean Fergie, who's joining us from Cyan Investment Management. Great to see you.
Thanks, Nadine. Great to be up here.
First and foremost, what is Cyan looking for in a small cap?
Look, for us, high growth and we like to say low risk. Now, that's maybe a little bit of an anomaly because people don't always associate low risk with small caps. You know, I think they think of the big blue chips as being low risk, but we think if you hunt around and avoid sort of speculative areas, then you can find that almost Goldilocks moment where there is a nice, reasonably de-risked small cap, but with still quite a bit of growth. And if you can nail a few of those, then you can get some pretty good returns in your portfolio.
Okay, I'll go through just a couple of things. Does a company have to be profitable for you to invest?
No. Commercially proven, we don't like to see businesses that have no revenue, no concepts. So that also avoids for us really speculative sectors like biotechnology, resources explorers. You know, they're sort of like, we're just hoping it'll work. We hope there'll be some oil down there. We hope our drug will work. Those binomial outcomes we stay well away from. It's pure speculation in our view.
So how do you at Cyan, avoid dud investments? Like, what's your process?
Not always that successfully, unfortunately. Look, for us, it is a consistency of message, a fact that, you know, all these companies, they're trying to grow. The unknown, the future is unknown. But if they're sticking to message, if they're sort of achieving what they say they're going to achieve, and they're sticking the theme is pretty much intact, that's what we like to see. But, for a lot of these companies, it's just about over time. It's like you can meet someone and you don't initially trust them, but if they keep telling you that they'll do what they're going to do, and if you have that consistent message over time, then that's how we build confidence, and that's how we build a position over time. We don't lump in and go, we're going to put 10% of our portfolio in this one stock we've just met. We'll build it over time, and we think that's a smart way to do it.
And getting out and doing the legwork. I mean, do you think that sometimes in small cap investing, investors can get carried away with sort of a narrative or a story or a thematic? And how do you avoid doing that?
Yeah, look, it's really topical at the moment because I think there's so many investors out there that are, just hearing stories, seeing money being made left, right and centre, don't know a lot about the business, but just seeing share prices go up. And I think it's got to come back to fundamentals. And so for us, we're a little bit privileged in that we can go out and visit management, see companies, see people's offices, maybe go and see their stores or look at their technology. And that gives us a basis, brings it back to fundamentals. But it's really important to not get too carried away just by buying an idea. That can work really well in the short term, but if you don't know inherently the intrinsic value of what you're putting your money into, I think long term that's pretty risky.
Are there lots of opportunities in the Australian market right now? I mean, if you're thinking in terms of valuation support?
Look, I would say valuation support's pretty hard work at the moment. It's being driven by low interest rates. So low interest rates mean there's a lot of money flooding into the sector, that the days of 7 and 8% fully franked yields aren't there. And so value's getting compressed, and I think it's taken a while for investors to really appreciate a new paradigm. The fact that you're not going to buy things on 10 times PE mostly, that valuation's getting harder. Of course there's opportunities. There's 2,300 stocks in the small cap market, so there's plenty of opportunities out there. There's plenty of risk as well. You've just got to sift through them and find the ones that you like, but also avoid the ones that really shouldn't be in your portfolio. Okay,
when you're investing in small caps, you've shared with me an investment time frame. We'll get it up on screen. Can you explain it to us? Because I think it sort of brings together all of which we were just talking about.
Yeah, look, I mean, for us in small cap, you want to find an edge. You want to find out something that someone else doesn't know, or you find a business that's about to become successful before someone else finds about it. That's where you get this sort of hockey stick growth in value. So for us, it's finding businesses that are commercially proven, so have revenue, but are not necessarily profitable, but are growing quickly such that they're going to go through that sort of that baseline of going from cash flow negative to cash flow positive, for it to be adopting some, I suppose, market awareness. We think that sort of about 100 mil market cap is where small companies become looked at by the bigger fund managers, and they have more liquidity and they start to revalue. And then we think there's sort of almost like a perfect storm where you get a business increasing in value, the market appreciates that value, you get a PE multiple re-rating, maybe they do a raising, acquire another business, and it's sort of the perfect storm where you get a nice little uplift in valuation over a sort of a 2 or 3 year period.
Right.
And we think that sweet spot in Australia is a market cap between about 100 mil and about $1 billion.
Okay, and you're now talking that time frame, while not firm, 2 to 3 years. I mean, what's the average time of holding in a Cyan fund?
I mean, if a business is going to plan, we'd like to hold a business for 5 years. You don't invest in Facebook or Google or Amazon and just for 3 or 4 year period. If your business has got momentum and a competitive advantage, you'd love to hold it for 10 years. But it's really hard to look at a 10-year time frame, and also with intra-market volatility in terms of a listed environment. But like for us, we don't invest in a stock because we want to hold it for 2 or 3 months. We like to see a sort of 18-month to 3 year time frame and then reassess. And so there's businesses that we've owned for 2 or 3 years, like a little software company called Alcidion that we've owned for 3 years, and we can see another 3 year time frame of growth for it. So that's how we like to look at it. But it's really hard to look at more than about 4 or 5 years domestically, I'd say.
Your big idea, so where is it in your opinion in terms of that life cycle that we were just looking at?
Well, coincidentally enough, it actually falls into most of the criteria we're talking about. It is not profitable. It's getting close to cash flow break even. It is capped at just over $100 million. It's reasonably illiquid, but becoming more liquid. It's recently done a raising, and I think it's becoming a well-known brand name as well. So one thing we really like about companies is if you can touch them and feel them and use them and experience them and see the inherent value to yourself as a customer, that's a really great place to start as an investment. Rather than saying, oh, there's a speculative drug out there that is going to cure something that I'm not afflicted with. If you can use an Afterpay or have Bellamy's or A2 Milk or go to a Flight Centre or Domino's Pizza and you enjoy that experience, that's a great place to say this is a company that should be in my portfolio. And so this is where this business, we think, ticks a hell of a lot of boxes. Not wanting to
the suspense is killing us.
A cliched phrase, ticking
All right,
the boxes.
Let's meet Dean's big idea.
Raiz has $1 billion in funds under management firmly in its sights, and it expects to achieve its goal by the end of the calendar year. Launched in 2016, Raiz is a mobile financial services platform that allows customers to save by rounding up from purchases and micro-invest into ETFs and superannuation. The technology was born out of US-based Acorns Group, which itself is planning a NASDAQ listing and is still the second largest shareholder in Raiz. The company recently raised $10.2 million via an institutional placement, with the funds being deployed to accelerate customer growth, develop new products, and expand into new geographies, with the focus on Southeast Asia. Raiz also recently made its first acquisition with Super Estate, bringing residential property investing into the fold, adding to its diverse asset class offering, including cryptocurrency. In the most recent half, Raiz increased group revenue by 17% to $5.2 million, while posting a net loss of $655,000. Active customers were up 54%. Australian Chief Executive Brendan Malone joined Raiz in 2015 as co-founder and Chief Operating Officer. He worked as Managing Director of Management International Group after starting his career at Royal Bank of Scotland in London.
And we are very pleased to welcome into studio Brendan Malone, the Australian CEO of Raiz Invest.
Thank you, Nadine.
Great to have you here. So, Dean, checks all of the boxes at Cyan, and then you've got that $1 billion funds under management. I mean, does that type of a focus, a goal, essentially, is that appealing? I mean, what does that mean to investors?
Look, I think what it means for me as an investor is the financials of this business are very transparent. That you can multiply the number of customers by the account fee, you can then do a FUM on their management fee, and with a few other transactions, like netting and the advertising, it's really transparent in terms of what they're doing as a revenue. And when all these numbers are growing in the right direction, that customer growth in Australia and offshore is basically just gone up in a straight line. FUM moves around a little bit with the market, but again, it's been going up. It means that it's very easy to sit down and do the numbers on this business. And that's what I like, is that transparency of the financials behind Raiz.
Well, that's so interesting you brought that up, because my notes is that Raiz, and Brendan, you know, we've had you in the auzbiz studios many times. You are releasing a lot of information to the market consistently. You've been very busy, you know, so far in 2021. So what is front of mind for you in terms of strategy right now?
I think the important thing is the transparency, both to our customers and to our investors. But what we've done this year through product development, we mentioned the acquisition, the capital raise, it's all about customer acquisition. With customer acquisition becomes a growth in customers, a growth in FUM, then a growth from an investor point of view in our revenue. And as Dean was talking about, we make it very transparent about the revenue streams that we have. You know, we're very happy with the multiple revenue streams that we can get, whether it be from the maintenance fee, from the FUM fee, from the advertising and the netting fees. And you know, we've seen a 40% growth in revenue over the last 6 months, 12 months, and that's excluding the Asian numbers. So when we do the growth from a customer's point of view, it's not just Australia that we're talking about. We've set a base in Australia, which is our home market. Now we've moved offshore, so those revenues and the customer acquisition and the growth numbers are coming through Asia as well.
Forgive me, superstate, allowing a residential property as an asset class to your users. How does this work?
Yeah, so
if we're talking about a micro-investing platform, essentially.
That's important. I mean, 22nd of January this year, we introduced customised portfolios. So what that means is we offer 14 ETFs plus the Bitcoin. Customers can weight their own asset classing in their own portfolio, which gives them a bit more freedom and a bit more education along the way on what those sort of ETFs mean, whether it's the US indices or the European indices. So what the asset class that we were missing from a lot of our customer feedback is property. So we've never had any of the property ETFs into the portfolio. So now what we did, we've looked around and said, what's the best way to do this? Superannuation is a big tailwind in Australia. It's important to our Raiz business with our Raiz Super offering. So we've come across super estate, and when you look at the businesses together, they fit perfectly together with bringing a retail residential property portfolio inside of super, and then we plan to take that outside of super and then offer that into our portfolios. So customers can get a micro investment into residential.
So one thing that's very attractive and very unique is that I think, you know, a lot of people want to make an investment in residential property and shares and overseas shares and Bitcoin, but they haven't got $1 million portfolio in which to buy an apartment and a couple of Bitcoins and they can do it through your platform so cheaply. You know, the fees are just $3.50, you know, a month. So. For me, that's really compelling. You know, we have clients come to me and say, "Oh, Dan, I want some stocks to buy," and I say, "Well, you don't want to buy just 3 stocks. You want to have a diversified portfolio, and you don't want to be spending $20 or $30 with CommSec on every stock." This is a great platform to be able to do it. Very transparent as well. So I think what you're doing is good.
And that's what drew us to the Raiz business and the Raiz profile, is that it can give everybody for as little as $5 an intro into the markets. I've got friends where I grew up would ring me and say, hey, I've inherited some money, what stock should I put it in? And I'm like, no, you don't put it in a stock, you put it in a diverse portfolio, and that's what Raiz creates. Very simple, in the app, real time, and customers can see it.
So Dean, that's interesting that you brought up fees and how low they are. As an investor, wouldn't you want Raiz to have pricing power?
Yes. Well, I think Raiz have proven they've got pricing power.
Because you did raise fees, correct?
Yeah. They raised their Raiz fees, and I mean, you know, percentage-wise, substantially from $2.50 to $3.50, which is still, you know, not even a cup of coffee. Certainly not here in Sydney, and saw very, very little churn. But so, in one respect, yes, you want customers, you know, a company to charge high fees, but then if they're charging low fees, it means their barriers to entry are very wide. You know, who's going to come in and start up a new business if they think they can only take $3 per customer per month? Which I think it's compelling that they're offering a service that's growing well, that they're generating good revenues from, because you've got a broad customer base now at great value for money. You know, and that's why Afterpay has been successful, because it's so compelling to the customer. They don't pay anything for it, so it seems to work really well.
And is that a volume that volume story, is that what's behind the expansion into Southeast Asia? How is that going? Give us an update.
Yes, look, and it is. It's all about customer growth, and we can look at the markets or the population inside of Indonesia and Malaysia and Thailand, where we're heading next, and then Vietnam. It is all about customer numbers for us, and our subscription model proves that. Indonesia's going very well. We're up over 110,000 active customers there. Malaysia's going extremely well. They're about 60,000 active customers, but they are still both in that acquisition phase. It's where the Australian business was a few years ago. So the Australian business is now cash flow positive. The money that the cash that we're making here, we are using to expand into Southeast Asia. So it's not a drain on cash flow. We're just redirecting the cash over there, and it is all still now product development, customer acquisition, product development, understanding what the local markets want and need from our product suite in Australia, and then roll them out across Asia.
Are you finding there's a lot of lessons you can learn here that you can take into those markets, or that culturally they're a bit different? Like, I would say, honestly, it's probably one thing that makes me a little worried is I'm not as comfortable with Indonesia and Malaysia as a financial services centres, and there's clearly not as much money per customer over there, even though the numbers are much greater. Is there a lot you can bring over that you've learnt here, or is it a bit of a learning experience as well in some of these new countries?
There's a combination of both. Yes, there are cultural differences, but the way that we've set them up with joint ventures with local partners provides us with the local requirements, the local understanding of the market. And what's happening in both Malaysia and Indonesia is that those guys are looking at what product suites we have, and we've got 13 to 14 different features inside the Australian app. They're saying, hey, this would work well, this won't. So there's a priority on what functionality is getting rolled out to what country, depending on the local culture.
Is this a capital light business or a capital intensive business now that you've got the app up and running, in terms of hiring programmers and tech and IT?
Yeah. I'm going to say it's capital light from the way that we look at it, because we have developers developing the product, rolling it out to Indonesia and Malaysia. But when we go to a new country, it's not something that, hey, we need 4 or 5 million capex just to get started. It is just a continuation for me, and I'm an ops guy, so I sort of call it as business as usual to roll them out. So it's not capital intensive. It can be down the line when you look at the total budget purely from the marketing spend. And the marketing is what we can leverage up and down at any time.
Mm-hmm.
One thing we're hearing in the market, there's a lot of these neobanks and small business lenders out there, and it's becoming increasingly expensive to market online, which is all doing this sort of below-the-line marketing. Are you finding a similar thing, that the search engine, cost per clicks and that sort of stuff is becoming harder or more expensive? And I guess maybe talk about your path to market in terms of acquiring new customers domestically?
Yes, it's getting harder, but what we do very well, and we do talk about it, saying we're one of the world leaders in acquiring financial services customers very cheaply. Our cost of acquisition for the 6 months was just over 10 Aussie dollars. Now that's very good, and that's on a global basis. So the way we've done it with our marketing and our engine as such, our admin tool links into the social marketing platform, so we know at any time what our cost of acquisition is, so we can turn it off if it gets too expensive. Keeping in mind, it comes back to the app. Our app does what our app says it will do. It's a great user experience. It's a great education. So 60% of our customers are coming through word of mouth. And if you can get that advocacy across the product, then you'll have a stickier customer on the other side. And that's key in all markets.
Well, that's one thing like I always do, especially with a business like this that's customer facing, is they'll tell me they've got a great product, whatever it is, and the first thing I'll do is download the app or go to the store or order the pizza. And if it works properly, that's a really great start. And that's what you see with Raiz. You go onto the platform, you see hundreds of thousands of users. Certainly on Android, it's a 4.6 experience.
Yep. Signed
up, put some money in myself, worked perfectly. Yep. I think there was a couple of issues with logins and stuff, got the customer centre, got it all fixed up, and I went, it works really well. And then it's easy for myself and to understand how other customers then, I suppose, recommend that product to other people. Yeah. It's a net promoter score type thing, which exactly makes your customer acquisition so cheap.
Yeah, well, you answered my next question. So you, as an investor, will take account of customer reviews, net promoter scores.
It seems like a really simple, basic thing to do.
Yeah.
Like if that information's out there and it's public, go onto the Apple App Store or the Android Store and just see what other customers are saying about this app. And if it doesn't work properly or they rip me off or whatever, you're like, you second guess things. But if broadly the experience is good and you experience a good experience yourself as well, then that's got to be positive. That's got to give you confidence that this is looking like an attractive investment opportunity.
So back to the sales and marketing. So I recently, I think, got an email or something came up on my screen about Raiz working in conjunction with the Iconic. How important from a sales and marketing standpoint are some of these alignments with other brands?
I think the important part about Raiz is we're a savings and investing platform. That's the number one key. So, and what we've done through there, and Fergie touched on one of our revenue streams of advertising, it is partnering with brands because, for example, my wife, we've got 2 young kids, and she will shop with either the Iconic or Bonds online through Raiz Rewards because she's going to shop anyway. So what that does is provide a percentage of cash back into her Raiz account. So she can't spend it, or she can withdraw from a Raiz account and then spend it, but it creates this forced savings, which is then in line with our actual purpose of the app. It's an engagement exercise, and we've got 317 brands across Australia on there, and we do see this engagement.
So I booked my hotel up here in Sydney, and I think got a 5 or 6% cashback through Booking.com. Yeah. And once you experience that, and you're like, okay, well, I'm spending money, but I'm also saving money, whether it be through an Uber Eats or
brands, David Jones.
Uniqlo. Yeah, there's a lot of them. It is now. I am talking my book, but it's an ecosystem where once you're involved in that and you're seeing the benefit, and it's actually doing financial good for their customers, is saving money they otherwise wouldn't be saving in a diversified portfolio, then that's got to be a good thing.
And we look at the customer feedback and the reviews that we were just talking about, and when people will put up there saying, hey, I booked my hotel, I got 5% back, that covers my fee for the next 3 months. It's giving them an experience in the market. It's all about financial education, financial literacy, and you're getting this on top.
Okay, so what's come through this morning consistently, strength in management and moats. All right, a question has come in from Andrew saying, you are seeing increasing competition in the space. Names a couple of companies, Spaceship and Bamboo, probably not exactly what you're doing, but talk to us about your moat.
Yeah. I think from a competitor's point of view, it's we have 430,000 or 440,000 active customers across our geographies. So we want to keep driving that. We want to stay in our lane, do exactly what we say we will do, and it comes back to the customers. The customers are asking for features, we're delivering those features. Customers are asking for feedback on reviews, we're answering those reviews or delivering a product that's suitable for them. And then I think from an underlying point of view, if you look at our business, there's no competitors out there doing 110% of exactly what we're doing. They're all doing bits and pieces of it. So we want to keep delivering on what we say, what we've set out to do, and we talk about the senior management team and the strategy. We outlaid this strategy 3 or 4 years ago. We haven't changed. We haven't waved. We're continuing delivering on what we say we will deliver.
So Dean, that's to your point about a company saying what they're going to do, doing what they're doing, and keep on doing it.
That's exactly right. And early on, Nadine, you spoke about the transparency of the numbers. Raiz put out monthly, reports on their customers, which is as much detail as you will get for any company. I mean, if you get it quarterly, that's a good thing. So you can track very closely what they're doing, and certainly when they put their fees up, what was 2 or 3 months ago, you could see that there wasn't as much churn as was initially feared. So it's very easy to be very comfortable in how the financials of this business are tracking, and you're not going to have a situation, we've seen it countless of times. I mean, Nuix is the most recent example. So, we've got a bit of a surprise. Our revenues aren't going to be X, they're going to be X minus 20%. And that won't happen with this business because you're seeing those numbers every month. And they're so regular and they're so recurring that the fees just get charged every month, and that's a really nice comfortable place to be from a financial perspective.
Here's a question coming from the audience. Any plans to launch the product in India?
Not at this stage. I think we have enough on our agenda with continuing Australia, Indonesia, Malaysia, Thailand's kicked off. We're moving pretty quickly there, and then Vietnam's the next one. So no, not at this stage.
Yeah, because Dean, as an investor, you don't want to assume too much execution risk in expansion. I mean, is it growth at any cost?
Not for us. It's not growth at any cost. I think, as I said earlier, I'm always a little bit uncomfortable when companies want to go offshore to try and take on new jurisdictions. The normal example is we're going to take on Europe and the US, and often ends in tears. I think there's a couple advantages with any online business. You don't have to make large investments. You're not out there taking on leases for shops or warehouses or building factories. You can launch a platform, and if it doesn't work, you spend a bit on marketing and local operations, and that's it. And certainly with Raiz taking on local partners, that takes away a lot of that cultural risk. I think you have in I suppose non-Anglo-Saxon businesses, you don't quite understand the intricacies about the different cultures and how they relate to money and marketing and that sort of stuff. So I think in that manner, it's being done in a both an operational and a financial de-risked manner, which is good. And obviously, what are there, like 250 million people in Indonesia and 40 million in Malaysia? So they are. You've got more blue sky over there for sure.
Another question has come in, I guess, in terms of expansion and growing the business. How do you think about using equity versus debt to grow the Raiz Invest business?
I think I like the fact that we've got a clean balance sheet at the moment, and the management talks about that a lot. And whilst we're managing our cash flow conservatively and redirecting the cash flow positive business out of Australia, at this stage there's no need to look at the sort of debt side of the business, any sort of debt raising. I think we're delivering on what we deliver on. We've just raised $10.3 million. It's enough for the next few years to get us to where we want to get to. We no need to raise capital. We have to keep a little bit of a ring fence here in Australia from a reg capital point of view, but that's all covered from a risk point of view. So no, I don't think there's any need for debt at the moment.
And what price was the institutional raising set at? This is for Chris.
Yeah, it was $1.50.
Okay.
Yeah, and then we followed it up with an SPP after that. The share price was below that, but we thought it was important. A lot of our customers are our retail investors, so we gave them the opportunity to get into at $1.50, the same price as the instos. But unfortunately, the share price dropped down for those 3 weeks.
Well, I thought you raised a little more money than you perhaps needed. Correct. But there might have been that feed the ducks while they're quacking mentality.
It was there, yes.
Well, temptation is there in this environment, isn't it?
It is indeed, yes.
So, Dean, when it comes to your investment in Raiz, I mean, if we think about next key catalysts, yes, we're talking about the international expansion. Correct me if I'm wrong, because I've read it different ways in different places. Acorns in the US is still your second largest shareholder, isn't it?
Correct, yes.
Correct. So, Acorns is going for a NASDAQ listing in the US. Do you think that could give a little bit of kick along to the share price?
One might think so.
Yeah.
I mean, the numbers they are talking, I think it was about 2.5 billion,
yep,
something like that. And the business is about, 4 times the size?
Yes.
Something like that. But about 10 times the value, arguably even more
than that.
Yeah. So, the broad numbers I've done is that the comparative valuations are raised at, $4 to $4.50 a share. Now, will that compare? Absolutely, I don't know, but I think when you've got two businesses that are almost exactly the same, one raising money overseas compared to you, of course there's got to be some sort of balancing as well. Mm-hmm. You've seen a little bit the kick up after they had when a firm listed in the US as well, so there's going to be those comparables. But even like that aside, I just see the continued growth in customer numbers, continued growth in FUM, growing out the businesses in Malaysia. There's so much merit in the existing operations that I can, confidently see growth in the share price without that. But yeah, look, I think that could be a really big catalyst. I'm actually surprised the shares haven't kicked up a little bit more on that announcement, but it's still 6 months away. So.
Yeah.
And I'm supposing you're going to say, as CEO, you don't pay attention to the share price.
Of course I don't. Of course I don't.
And so what are you really paying attention to now? I mean, if we're going to talk about Raiz in 5 years, yes, you hope to grow volumes across Southeast Asia. You're now allowing people to invest in crypto and residential property. I mean, what is the vision, the ultimate vision at Raiz?
It all comes back to a financial savings platform, providing this education, providing this access to a market or something that they haven't seen, which will then feed it through different generations. I think we raised the point before that we're not a company that's a cost of acquisition or growth at any costs. We manage that. And I think from the management team, we understand the importance of managing that for the longevity of the business. And yes, we probably did raise a little bit too much, but to have a solid cash at bank going into the next couple of years is very exciting from my point of view and the business and the management point of view with the plans that we have. I think it's important that it's the customers, the FUM, the revenue per user point of view, but also from a more of a geographical point of view. The Australian market is important to us. We want to continue to stay strong, continue to be a market leader here in Australia, whilst you're not taking the eye off that, whilst Indonesia, Malaysia, Thailand and Vietnam grow as well.
This one's a little bit technical, but we'll squeeze it in because we've just got a couple minutes left. From Clinton, saying, as you expand into other Southeast Asian markets, are those customers already investing in ETFs in their domiciled country? If so, are there additional costs to creating these portfolios? And I guess that comes down to the regulation around financial products in different geographies.
Yeah, it would be all down to the local markets. But for example, in Indonesia and Malaysia, then there's no ETF market. Well, there is, but it's a very small ETF market. So the actual underlying investments or portfolios that the customers go into are like mutual funds. So it's a breakdown of those. So, you know, I think they talk about, and I'll just use whole round numbers, there might be 1 million people that have had the equivalent of a HIN in Indonesia compared to the Australian market, whereas the population is 290 million people. So what we're doing is breaking down those barriers to get the everyday Indonesian into the stock market or into a mutual funds or a portfolio that they haven't had access to before. So it all comes down to the local regulator, but the ETF markets are a bit small, those countries. And
corporate governance, ESG, do you guys at Cyan put any sort of a filter over your investments in that regard?
Not specifically. I mean, we tend to want to see companies that are doing good things, that are providing good products and making the world a better place. Now, we don't necessarily avoid gambling stocks, but it's not something we typically invest in as well. But we think, you know, bringing it back to Raiz, it's a company that's doing good things for people. It's increasing their financial health. It's enforcing savings. It's making people financially independent. We think that's a good thing. It might sound a little bit cliched, or sound like I'm coming from a banking business, but I can see the benefit coming. My kids have got small Raiz's accounts, and they can see it growing. You know, maybe they focus on the stock market and Bitcoin prices a little bit too much, but that's life. That's how people generate, you know, significant wealth over their lifetime. So we think, you know, again, it's probably got some really good ESG aspects to it as a business.
I was amazed. I was in a shopping centre on Saturday, and I had the Raiz T-shirt on, and I'm sort of walking around all proud, and a guy came up to me, oi, is that Raiz? And I said, yes, yeah, mate. He goes, oh, I've never had $1,000 in my life. Look, he opened his app and he had $1,011. And then his cousin was there and he goes, look, I've got $1,000. I've never had $1,000. For me to walk out, I was kind of like, that's perfect. That's exactly what we want. It provides a saving and an educational tool for people that haven't been able to save before.
Yeah, and that app has the this is how your investment will look in 10 years. And with a compounding, you'd see that 1,000 being worth 5,000 or 6,000. So it's
and they're in for $5.
People haven't thought about that. Yeah. Think, this is a good product of saving for sure. So yeah, we like it.
It's your investable idea. It's your small cap big idea. Brendan Malone from Raiz, great to have you in studio with us, and Dean Fergie from Cyan Investment Management. Thank you.
Awesome, thanks, Nadine.